So let's talk about time and price now. And in one of the last videos, I already went through kind of the basic rules, gave an example, and kind of talked a little bit about this trade and gold that happened. And so you can kind of refresh your memory here with that one. I want to look at NQ. And what I'm going to do is also talk to you or show you some of the data that's associated with time and price and kind of where we get some of these levels. Now, when we're looking at NASDAQ here, NQ, this is August 22nd, 2024. What we're looking for is we're looking for a confirmation, which we get. Okay, now once we have a confirmation, again, now we have our levels. We have our target levels down here. So if you remember, these are all our target levels right here. And these are our retracement zones. Okay. And I have a set of rules. This is not going to be very clear that's in this particular example. I have a set of rules for looking for entries within the zone that gives us a more narrow stop loss usually. And that helps us generate more R out of our trades. And so, like we're not going to see that as an example because I don't have time to go into a lot of the details there of how this actually gets executed, because sometimes these zones are pretty wide. So this is a pretty big zone. If you were to put a trade on at the edge of the zone here, you're looking at a 42 point stop loss and you really only have 2R down in the mode. Okay, so you can do one of two things. You can kind of like keep pushing this up and try to get 3R, or do what we've done, which is we found a way to optimize using lower time frame charts on how to actually get in on the turn of these particular trades that happen within the zones. Okay, so that's not really going to come through very clearly, but what I do want to show is just the fact that here we have a confirmation. We've come back. We're testing this level, this zone, and we're coming back into it. We're coming back into it. Notice we come up into this level here, and then we start to turn. And so, even if you were to put your stop loss, if you were to do something like this, and you just use 2 levels as your guide, so you could put that there, or maybe you put it here, and then you kind of go up here. Maybe you enter on the close of this as a 5-minute. You do that. It's still pretty healthy R. You have about 3.5 R down to the mode. You have about 4 R there. Okay, so down to the median. So if we kind of went for something like this, we kind of get this nice straight move all the way down, right? So just a really nice move that just pushed down. In fact, if we kind of have on our lower time frame chart, we actually might have a trade that looks a little bit more like this, where we actually got a tight turn here that happened that resulted in something a little bit better. Maybe resulted in, let me blow this up a little bit so you can see this was 7R versus what we had before, which was about 4R, 4.5R. Okay. And the question is where do these levels come from? Like what actually are these levels? And so let me just talk about that for just a quick second. So I know this isn't pretty, but these are some of the charts that are produced in the application I have. And the application allows me to filter. It allows me to, kind of take a look at the individual scenarios that are happening on the chart and then find the levels that are the highest probability levels of something happening. And so from this chart, you can see right off the bat that over here on this left chart here, and what we can do is notice this node here, we have this node here and this node here. So this zone right here tends to be a zone where there's a lot of activity. These levels right here are a lot of activity. And what we end up doing is mapping this zone and these levels out back to our charts. Okay, and there's a way to do that specifically around how we look at our DR and IDR zones. We also notice that we also have this one here. That one might be one to add as well. So we might have a zone that goes from here, and then this is a little narrow zone right here. And that's what I'm looking for. I'm probably looking for something in between here and something that goes to here. We also have extension levels. So we can see here, the most likely highest probability extension levels. We have this one here. We have this one. In fact, we kind of have these two right here. That might be an extension zone. But for sure, we're going to want to have these things here, maybe this one here. This median value is also important for us. So it doesn't look pretty, but it's very effective because this is taking a look at roughly 16 years worth of historical data. What has this particular instrument done on this particular day at this particular time with these particular characteristics? And it happens over and over and over again. It just repeats itself. And what I end up with is some really great high probability locations and even timing as well. So here's some retracement times. We talked about the timing aspect of it. So when is most of the timing happening for when retracements are happening, as an example? So I just wanted to show the example of not just the trade, but also wanted to show an example of the data, and that the data really isn't coming from levels on the chart. It's not support resistance. This is something entirely different, and it's looking at statistical analysis of historical market data with an assumption that patterns repeat themselves, and they do. And that is what time and price is primarily based on.